Okay, so now what we need to figure out is how to build our cost per point. Okay, so the example from the last video was that we were converting a job where we've traditionally billed it as 240 hours according to the average painter. And we assumed that the average painter was somewhere right in the middle, 1.5, and we calculated that a your more experienced painter is going to be able to produce twice as fast as your less experienced painter. Okay, so what we decided was that, okay, in this 240-hour job, that we were going to increase the price by 1.5, or increase the this amount by 1.5 to find out how long the slowest individual, how many points there are in it, and that was 360. Okay, and then what we did is uh, we took the craftsman level, and we said the craftsman is equal to 2A, and that the apprentice is able to produce 1 point per hour. Okay, which means that the craftsman then would be able to produce 2 points per hour. What we also discovered was that if we were going to divide this out, then we would see that the craftsman was going to produce 240 points, while the apprentice was going to produce 120. Okay, so that's the basically where we're at. That's the recap. Okay, so now what we need to figure out is how much are we going to actually charge per point. Well, let's start with the basics here. So if our apprentice, if the person that is your apprentice, if they are able to produce 1 point per hour, then that would mean that in order for them to be at the company, whatever their base hourly rate is, that is the cost of a point. That's how much it costs them to do the point. And so let's say, for example, this person who can produce 1 point per hour is paid $15 per hour. Okay, so they're paid $15 per hour, and that means that they have to be able to produce 1 point an hour, and that point, the cost of that is equal to $15, right? But if your craftsman is working and your craftsman is able to produce 2 points per hour, then what they're going to cost you, or at least what you ought to pay them, is up to $30 per hour, because they're twice as productive, right? You may not be paying them that, but that's the maximum of what you would be able to pay them if they were producing that much revenue. So regardless of who is painting, and regardless of who is doing the point, that means that your base cost is going to be $15 per point. Now, you have a few added expenses on top of this that mean that that will cause you to raise the price on this point. What we're doing is we're building your marginal cost per point, okay? So the first thing that we have to add to this is, of course, the payroll burden. If you're paying payroll taxes, if you have workers' comp costs, if you are going to be paying for their uniforms and their Social Security. I mean, there's all the payroll burden. Well, generally speaking, we want to raise that. We want to raise this by 20 to 25%. Let's use an example of just raising it by 20%. So all we're going to do is we're going to multiply that by 1.2, and that's going to give us $18 per point. Okay. So now our marginal cost, we realize that our marginal cost at this point is $18 per point, but we're not done there, because we have fixed expenses, of course, across the year. And so what you're going to have to do is you're going to have to tally up all of your fixed expenses for the year, or maybe we just do the month, and we say, okay, so this month, let's just say, for example, for easy math, let's just say, for example, I've got $10,000 in expenses. Okay, so if I've got $10,000 in expenses this month that I have to cover, and these are fixed expenses, which this is high. Okay, I mean it depends on how big your company is, but if you're a small average company, this is quite high. Um, but I just want an easy number to use. Okay, so if this is the case, then what we have to then realize is, okay, well, how many points is our team able to produce in any given time period, right? And so, for this apprentice here, right, we've got this apprentice, and he or she is able to produce 1 point per hour, and let's say that they work for, a total of 8 hours, right? Then that means that they have 8 points per day that they're producing, and then they're going to produce a total of 20 days, and so we're looking at a total of about 160 points, right? And so then let's say that you have another person, and they produce roughly double, so they do 16 points per day, right? And they're going to work for 20 days in the month, right? And so they can produce 320, right? And so all we're doing now is we're just doing math. We're adding up how many points each of our people can do in a given month, right? How many points are they able to produce? Well, let's just say, for example, let's just give a nice easy example, and we'll say that our people are able to produce 2,000 points in a month. We have multiple people, and we keep adding this up. So obviously this is 480, and so let's just say that this is one group, and in order to get to 2,000 points, we're going to need at least 4 groups out there. Okay, so this is a company with about 8 to 9 people that are going to have to cover these expenses. So let's say that they are able to produce 2,000 points in a month. What that then means is that you're going to have to add $5 for every point in order to cover your fixed expenses. So we're going to add that right here, and we're going to say, okay, now our marginal cost here is 18 plus 5, which is going to be $23. Okay, $23. Now what we want to also do is we want to have we want to have profit margins in this, right? And so this could be anything, but let's say, for example, that we just want to we've done our math, and we've done our numbers in the area, and we know that if we add $7 to this, that we're going to have a healthy profit. And so that brings our marginal cost to about $30, okay? But then we also need to pay out a rev share to the person who's selling the job, right? And we want to be able to they need to be able to mark that up and have enough to cover their costs and cover their marketing expenses and cover the cost of acquisition and the time that they went into it. And so they might add another $10 to $20 to this, right? And so let's just say that they, for example, they charge $15 for every point that they sell, and that equals $45 per point. And so then what we'll do is we'll take those two numbers, the 360 points, and let me back up, but let's just make this a little bit easier for me in mental math here. Okay, let's just say that we decided we were going to do $40 a point. Okay, so let's multiply this by $40 a point. That covers both our marginal cost and our rev share and our cost of acquisition here, and so that means that this job is going to be, drum roll, 72 plus 72 is 140. It's going to be about 1,000. It's going to be $14,400 That's what you're going to charge for this job.